Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
At some point, we're going to have to admit that we're wrong, and that's really one of the toughest things for a beginner or a novice trader to admit, is that they're wrong, because we tend to take so much time building up the courage to click the button, and we spend a lot of time researching and rationalizing the trade, that once we've clicked that button, it's like we're dedicated to it, and there's nothing that is going to convince us that we're wrong. You know, the unfortunate thing is that the market, whether it's we're looking at ISE option pair values, or whether we're looking at standard equities, the market doesn't care whether or not you've spent a significant amount of time analyzing and surmising what's the best approach. It's going to do what it's going to do. So on occasion, we may find again that we've entered a trade a little more prematurely if we've planned it out effectively, but we find ourselves on the wrong side of it. Well, then there's a few things that we can, of course, do to correct. One of the things that we want to consider before we ever enter into a trade, and this is where it comes down to, more or less having an understanding of your price charts, is we want to look for a conflict of interest between our indicators. And sometimes it's, when we look for a trade entry, we're looking for confirmation of whether it's our MACD, whether it's a pattern or so on or so forth. We can actually go in and look for conflicts. Now, the idea is that we don't want to have to make adjustments to our trades if we can help it. We want to be able to get into a position and essentially have our timing and our positioning effective enough that we don't have to worry about sort of tweaking it. But at the end of the day, sometimes these things happen. Your successful trades are going to start with a sound analysis, and that might mean, casting aside 3 or 4 what look like potential opportunities just because there's something that doesn't look quite right. Recognize that there's nothing wrong with standing aside and waiting for an ideal opportunity. In fact, you'll find that it'll keep you out of a lot of bad trades just by spending a little bit more time sort of looking for reasons why not to get into the trade. But recognize that your successful trade is going to start with an understanding of your charts. Again, we're looking for clues in our indicators, but in this case, what I'm suggesting is that, if you're anticipating a certain directional move, what you want to do is look for a conflict within that pair value, in this case talking about ISE options, within that pair value that may be suggesting that it might not be an opportune time to enter. Now, one of the easiest ways, and the one that we're going to focus on this evening for a little bit, is our MACD convergence and divergence, because it's a very easy conflicting piece of information that we can identify. So right now, I've put up the AUX. So this is the U.S. versus the Australian dollar, and this is a daily chart. And what we're going to just identify here is just how we can use MACD convergence, as we call it, in order to establish the potential change in the direction. So we're going to start with looking at what our MACD is in fact doing, and at this point you can see within that highlighted area that MACD is trending down, and traditionally what that means to us is that, okay, we're in a downtrend, and so consequently we should be looking at maybe taking advantage of buying some put options as the AUX continues to trend to the downside, of course, recognizing that what we're doing is we're essentially trading our views on the U.S. against the Australian dollar, and we're suggesting that the U.S. dollar is going to weaken against the Australian dollar. So looking at that MACD, we can see that the blue line is below the red line. In this case, we have it trending quite strongly to the downside, suggesting that we are in a downward trend. we go up to our price chart, and we can see that, in fact, we're getting our lower lows, which is again supportive of a continuation to the downside. Remember, keep your technical observation simple. A downtrend, you need to see lower lows and lower highs, which is essentially what we're seeing here. The piece of information that we're looking at as a conflict is in our histogram here, and you can see that as we're making lower lows and as our MACD continues to trend to the downside, our histogram is actually starting to show loss of momentum. So what it's telling us is that this second low here was made with not quite as much conviction as this first one. And so if you're a person that was anticipating on jumping in to a trade on the downside, looking at this little piece of information here is cause for you to step back and just look for a greater confirmation if you want to take advantage of a move to the downside. And of course, as we can see here, with that divergence taking place, as we started to break up, you'll notice that of course we began to trend to the upside. And we can see a similar thing happening right now, and it will, again, we need to see how this plays out. But of course, today we managed to close a little bit higher. We're up about, I believe, 130, if I'm not mistaken, about 138.5 to 140 today. So we had a little bit of a bullish day today on the AUX. And as you can see here, we had our MACD trending down. We had our price action suggesting a continuation to the downside, but the conflict comes with this convergence taking place on our MACD, and we call it convergence because you can see here that the two lines are basically converging into one another. Now, that's not sufficient for us to enter into a trade, but what it is sufficient for us to do is to step back and look for the possibility of a change in direction. So just to review some of the key things that we need to see for a trade entry, what we really want to do before we actually really go in and take advantage of a possible move to the upside is we want to identify an entry point. And that entry point, although a ways away from where we are, is going to come with a key pivot. In this case, we're looking at roughly the 141. Now that's a long ways away, but until we see, realistically from a currency perspective, I mean, we can make these moves in a day, but as you can see here, we have what has been formed here is a very key sort of resistance level, and if we hold true to our observation that in an uptrend needs to make higher highs, we need to see a break of this pivot point here in order for us to be comfortable. So what's happened is we've started with this observation as a MACD convergence, and now we've gone in and established an ideal entry point, and if that point is not triggered, well then we stand aside and we don't take advantage of or we don't enter into the trade. But because there's conflict here, we don't want to be chasing the market. Now, Steve, I don't know if I'm not able to see any of the questions that are coming up. Is there anything that I need to answer at this stage, or?
Jace, I think it's probably better. Let me just read you one. Barbara wants to know the histogram part of the MACD. What does the histogram part of the MACD actually represent? What math gives rise to the
histogram? All right. Yep. Well, you know what? I'm gonna keep it real simple because I'm definitely not a mathematician. But first of all, the histogram or the MACD is simply a hybrid moving average. What it's doing is it's taking the last 12 bars, as you can see here with my arrow, the last 26 bars, and it's averaging the price action out and then averaging them together and plotting our red line, and then we're taking the last 9 bars and we're using the last 9 bars as a signal line, and that's where your blue line comes in. So we're using that blue line as a trigger.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.